Hi guys, welcome to another video from Little Too Simple. Despite being used interchangeably by many of us, the words trading and investing represent two completely different ways of making money from money. In today's video, we'll be discussing the differences between trading and investing, the benefits and drawbacks of each, and which option is better suited for whom. Now, let's dive right in. Trading refers to the buying and selling of securities with high trade volumes, such as stocks, bonds, and derivatives, based on short-term price movements. Only securities with high trade volumes are suitable for trading, as they allow traders to rapidly enter and exit positions. The duration of holding a position can range from just a few seconds in the case of high-frequency traders, to a few days in the case of traders working with complex derivatives. Investing refers to buying into various financial instruments spread across multiple asset classes, ranging from stocks, rights, gold, and cryptos to many other conventional and alternative asset classes. The intention is to hold them for the long term and earn returns primarily through capital appreciation. Investors usually avoid instruments such as derivatives, and instead, focus on long-term growth. Traders rely heavily on technical analysis and use tools such as moving averages, candlestick patterns, and other short-term indicators to make decisions. Investors depend more on fundamental analysis, relying on company filings, financial returns, PE ratios, earnings per share, and other long-term performance indicators. Trading is extremely susceptible to market fluctuations. Since it's nearly impossible to predict market movements with accuracy, trading is considered highly risky. However, the main attraction is the potential for high rewards if trades go as planned. Traders also practice risk management strategies such as quick entry and exit from positions, using strict stop losses to limit losses. Investing, on the other hand, involves relatively less risk. Since it's done for the long term and based on fundamentals, investors usually stay put when prices go down. If the fundamentals are strong, this approach generally ensures positive returns over time. Short-term capital gains tax applies, which is usually higher than long-term capital gains tax. Since traders carry out a large number of trades, they often end up paying a significant amount in taxes. Additionally, frequent transactions lead to high brokerage fees. Long-term capital gains tax applies, which has a lower rate. With fewer transactions, overall tax liability is lower. Investors also benefit from low brokerage costs due to low transaction volumes. By this point, many of you may have concluded that investing is better than trading, and for most retail investors, that's true. But here's the twist. Trading actually generates better returns than investing, but mostly for professionals and institutions. Why? Because trading requires skill, expertise, and resources that most retail investors lack. Retail investors often lose money in trading because they don't have access to advanced tools or large capital. In contrast, institutional traders, such as hedge funds and large firms, have access to Bloomberg terminals, subscriptions cost over $20,000 per year, advanced trading algorithms, sometimes costing millions to develop teams of highly skilled professionals. With state-of-the-art tools, expertise, and massive capital, these traders are able to consistently profit from trading. So, in simpler terms, investing is better for retail investors, like most of us watching this video. Trading is better suited for the big players, large funds and institutional traders. We hope this video has improved your understanding of the differences between trading and investing. If you've made it this far, let us know your thoughts in the comments below. And if you found this video interesting, don't forget to check out our channel for more videos on personal finance, financial success stories, and business case studies. We'll see you again next week.